Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 17th, 2008. Well folks, today was follow through, and no sooner had we seen a solid rally in the markets yesterday than the second day of rallies came with a vengeance. And you saw the Dow shooting up another 207 points, the Nasdaq climbing another 27.5 points, and the S&P 500 up 15 points. Across the board, 1.5% give or take on the various indexes, as the Dow was up 1.85% and the Nasdaq and S&P were up about 1.2%. Now the keys here in this market, folks, and this is what we're going to go over because this is where we get very tricky and the semantics, the little nuances of everything we say become so important. Because now you've had the bounce in the market, or at least the initial start of the bounce in the market that's been expected over the last couple days. You guys know 2 videos ago we talked about the insane amount of shorts in this market and how it's very, very unusual for that many shorts to be in the market without a squeeze. Well, we've had that squeeze now. You're talking about the Nasdaq up basically 90 points or so, almost 100 points in the last 2 days. The Dow up almost 500 and so forth, and it was just a tremendous move. But now this is where it gets important, because this is where you need to know where this market is going tomorrow, where's it going next week, and where's it going weeks after that. Alright, so we're going to talk about that, folks, and go over the little nuances in the charts, because today was another follow-on rally, and we talked about the importance of follow-through. Alright? This is confirming the up move is beginning, we believe, but at the same instance, and this is where it's going to get key, so listen to this, guys. Well, you have to, after a mega 2-day rally like this, you have to have a pullback in the markets, and I'm going to show you on the charts where this is telling us this, so be ready. Now, we're not talking about a pullback. We obviously don't want to see a major pullback in this market. The last thing we want to see is the indexes reverse and go to new lows. If that happens, then the up move is negated. What you do want to see is a pullback of 50% of the move we've had. Either that or somewhere in the Fibonacci retracement level, and that's where you want to start to look for. So keep an eye over the next few days for the possibility of a pullback. And I'm going to show you this all in the charts, how you guys can tell for yourselves that the market is due for this. Let's go into the futures chart right here, the ESU8 September 08 contract on the S&P 500. Now you can see pretty much today, it was up and down, but for the most part we held a nice little upside bias in this market. And you can see you started out strong early on. There was some positive news coming out in the markets, some more financial positives out there, also some tech positives early in the day, and that helped the market buoy itself. Again, the key to this market though, guys, financial strength during the day and oil falling. And of all people here, guys, you guys know we've been talking about oil at a top position for quite some time, and I want to show you guys the daily chart, because look at this rollover from this double top. Alright, now I'll be the first one to admit, when the oil was here, we thought it was the top. It went up a little further, then reversed, and then we were in the money on our play. In the chat room, we did a play on DTO. We made a nice chunk of change on that fall right there in oil, as DTO is 2 times long oil, and then it retraced up, and we didn't get in again. I'll be the first one to admit, I wish I got in that DTO there, because the fall in DTO, in the oil index right here, which is 2 times long on DTO, and I'll show you that chart in a little while, was just tremendous. But either way, this is where we were talking about the short on oil, right in this area, right in that 140 range on oil. You got a little higher, you got as high as 147, but then you see the fall here. And this is, again, keep in mind, folks, look at the pattern formation, a possible M pattern here also in oil, double top, and that's what we've been talking about. And this is why, you know, I can't tell you how many emails we received and calls, people saying it's supply and demand, there's so much demand out there for oil, oil's going to go to 150, 175, 200, even analysts in the media were saying this. And here alone, InTheMoneyStocks.com is sticking their hand up and saying, guys, we believe this oil is pretty much done here for the near term. Maybe in a year or so it goes back up. Maybe if there's a war with Iran and Israel, it goes back up. But other than that, this oil is coming down, and it's coming down hard. And we do believe it's coming down very, very hard, folks. Alright? Now, one thing about oil I want to talk about. We talked about some key levels here, and I want to show you this. And let me erase these lines and touch on oil as we go. But number one, with oil, alright, I'll leave the double top in there. Number one, you have some major support on the USO coming up right around here. Okay, right here you have major support on oil, and this level is at 104, okay? So keep that in mind. 104 on the USO is major support. It's a gap fill area. So if you do happen to hit that tomorrow, 104, don't be surprised if you get a bounce. Alright, in oil. And I'm not talking about a major bounce, but a couple dollars up in the USO, maybe $5 bounce in oil over the next week, early next week or so. That wouldn't be shocking to see. All right, the other option would be is it fills this gap and just continues to go to the next support area right here. Okay, good solid support right here, and this is right around that 100 mark. 100 on the USO, and I'm basing it because all of you guys can look at the USO chart and see this, so that's why we're talking about it. So again, notice coming down to 104, first support, which we almost got to today, but we didn't quite get there. That may happen tomorrow early, and then we may see a bounce. If you don't stop there, the next stop on this would be $100. But again, I would happen to put, slight odds in favor of a little bit of a pause here. Maybe a bear flag formation would be perfect before the next drop in oil. But again, we'll have to base it on as the charts lead us. Every day we look at the charts and reanalyze. Now let's talk about the SPY, all right? The intraday chart I mentioned was kind of, just a constant little up and down move all day, favoring the upside. Again, the nice little confirmation rally today. Now the key on this market, folks, here's our turn date, and we have recaptured it. But now, guys, we want to see a pullback, and you want to see consolidation, all right? We just about got to this 20 moving average. We may touch it, but I would favor just to start to consolidate here and pull back a little bit. And what you want to see is a pullback right in this realm, somewhere around 50%, which would be right somewhere in this MAC area right here. And then as long as we don't take out these lows, and this is the key, guys, this will remain a bullish pattern as long as you don't take out these lows. You take out that low, and then we have to talk about a new possible move down. So keep that in mind, guys, is that after we got confirmation today, especially moving back above our key turn period area right here, and this is from calculations of price, pattern, and time, the time issue got negated because we went down. And this was a good email. Someone asked that question in email form. They said, well, if it was partially timed, does it still matter at this level? Well, the calculations that we do, the intricate calculations, are based on pattern and price in many instances, knowing how many candles, knowing how many ratios and so forth, and all that still means that this is a key level for us, and you guys can see how we recaptured that. Now at the same time, you've had a big move up, and you want to see the healthiest thing for this market is consolidation and a small pullback. So a move tomorrow on the Nasdaq, let's say minus 20 to 30 points, would not be a bad thing. All right, a minus 100, 120 on the Dow after being up 200 today and 300, close to 300 yesterday in that range, that would be healthy. All right, even for a few days if that were to happen. The key is you just don't want to take out this low. Now let's look at the Nasdaq, because this is the key as well. And I'm going to show you a few things. Notice the Nasdaq had a huge move, 3-day up move now, piercing the 20 moving average. What do we know about the first hit of the 20? All right, everyone should know this by now. First hit of the 20, you usually get a pullback. So expect some sort of consolidation pullback, and then we'll talk about another move up. All right, so notice this chart, because I'm going to put these pieces together and then show you an after hours picture here of what's going on with this market. All right, so you have a key hit on the Nasdaq. Nasdaq signaling a possible need for a pullback off the first hit of the 20 in about 2 to 3 weeks. All right, ever since up here. So that's a signal right there. Now Microsoft had earnings after the bell. Let's take a look at that chart. What do we know about this chart? 3-bar move up, touching the 50 moving average. I hope you guys can see the 50. It's right here. So not only did you see the Nasdaq hitting resistance, but Microsoft. Well, what happens to Microsoft after hours? They miss earnings, and the stock is down. So notice how the charts are telling you here what is most likely going to happen. You had a key hit of a major moving average, which indicates usually a pullback, and earnings just happen to come out after the bell, and they miss, and the stock's pulling back to around 25.75, down in this range. All right? And again, that's just stuff that you need to put together, understanding that, and understanding that when the market moves up in such dramatic fashion, it needs to come back in a little bit. So again, we'll keep in mind, we're going to watch a lot of things for tomorrow, but you have to understand that that's a very fair possibility. The other thing is the XLF. Notice the XLF, major rally, and look at where it ended. Right here on the 20 moving average, a major resistance area. So those of you that know charts and chart analysis are going to say, okay, we just hit the 20, that's our exit. If we were long this, you want to exit it right there, and then we want to reevaluate after we get a consolidation pullback if that should happen. All right, and obviously Merrill Lynch comes out after the bell today with some not so great earnings, missing estimates, and the XLF is kind of down a little. Now, Citigroup, I believe, reports tomorrow. That can all change the picture. But my point here is, folks, is use the charts more than anything else, and it will basically lead you to what will happen. Now, in addition to Microsoft reporting after the bell, Google reported, and Google getting slammed here, down about $40 after hours. And this is not pretty, folks, for tomorrow. And again, I want to just point this out. The Nasdaq chart, and I'll show you the Nasdaq chart here. You can see closed at 533, trading at 493 by 493 and change. But the Nasdaq chart told you that there was a fair possibility that you'd have a pullback from that level. And I'll show that chart again. All right? Note this move up, 3-bar move up. First of all, those that took the webinar know 3-bar surge issues right there. 3-bar moves into the 20 moving average dictates usually you have a pullback. Microsoft earnings, Google earnings indicate as of now, and that could change, that the Nasdaq will have a pullback tomorrow. Alright, so again, this is just using chart analysis, very simple chart analysis to do our analysis techniques and understand even before the earnings come out where this market can go. So I do want to point that out, folks. Keep in mind that, again, what you're going to look for now on the Nasdaq is consolidation move, something like this. So a down day tomorrow or a down day next Monday or Tuesday is well in the range of things, and then we start to look for the setup on the chart patterns for the next move up. This is all covered in the Intra Day E-Mini stock chat. We do all our analysis in there. We talk about the markets all day. Come join the swing trade alerts. Fantastic the last few days on the swing trade alerts as they've been hitting targets left and right on a bunch of them. And just have a wonderful day, guys. Hang in there. Market may see a pullback tomorrow, but that could all change by tomorrow morning. We'll talk to you then.